Welcome to this episode of the Hidden Money Podcast. We have returning guest, Kyle Gabhart, Tyler Wright, Bluegrass Legacy. Today, we typically talk tax, and now we're still going to talk maybe a little bit of tax in this episode, but when you have financial guys like this in studio, you leverage that. And so we're just going to get a market update, kind of what's going on. Politics have changed drastically in the past 7 months. What is that doing to your bottom line as an investor, and what are we going to go from there? So welcome back to the podcast again.
Great to be here.
Thanks for having us.
Yeah, so interest rates. Because interest rates affect literally everything, from your portfolio to real estate to whatever you're borrowing, whatever it is. So give us a kind of an update, and where are interest rates, do you predict with your crystal ball, where are they going?
Man, that is my favorite question. And I'm telling you, when I'm with my wife and her friends who are all working in hospitals, no one asks me.
No one cares what I think.
So thank you. And finally,
your time to shine. You got this.
Well, so interest rates is something that you, myself, Kyle, nobody has control over, but there is someone who has some level of control, and that's the Federal Reserve. And if you keep up with headlines, you've probably seen the name Jerome Powell, whether it's taking heat or whether it's our president yelling at him for not lowering interest rates.
We're overspending by $500 billion on the rebuild of the federal treasury area. Yeah.
Neither here nor there. But what I do know is he has control over the daily interest rates that the government, the ability to lend money overnight. So the federal funds rate, and he can raise or lower that based on what he's seeing in the economy. The two things he cares about are inflation and unemployment. Those are the two pieces of data they're looking at.
The two things he claims he cares about. There's a third there. It's become very obvious in the last few months, but I just had to throw that in there. Go ahead.
So on paper, the things they care about are unemployment and inflation. It's which of these two 600-pound gorillas do we want to fight? And lately, it's just been uncertain because they both look angry and they both look like they want to fight.
And Instagram's made it really clear that we lose if we end up fighting gorillas.
Yes.
Like, we've got no chance against gorillas.
Yes. But how do you fight inflation? You raise interest rates. How do you fix unemployment? You give people the ability to take loans for very cheap, words are hard, very cheap, and you lower interest rates. So on one side of the aisle, people are saying lower interest rates. There is definitely a struggle going on in unemployment, and we need to spur up economic activity. If you spur it up too much, it sends inflation high, and we saw 2022, 9% inflation. I don't want that. I don't think y'all want that, and that's the demon we're fighting right now.
Yeah. And we felt that in our own business. Inflation as a business owner, all of my vendors, their prices went up. Everything went up. And and Mike and I, we actually met and we're like, hey, our employees are suffering. I mean, if we give them a 4 or 5% raise, they're not making money. So we gave them a more raise than they.
We gave them an inflation raise out of the blue, off season of 10%, just to keep them on parity because we knew how hard it was for them and how hard our government was making it for them.
And then in turn, all of our costs went up. So our margins and our net income's going down. So what do we have to do? Raise prices. So now we had to go back to our clients and say, hey, we're going to do the same work, but we're going to have to charge more. Surely you understand. And I always equated it to my clients when they say, why are you raising prices again? I'm like, think about building a house. If you could have built a house in 2016, the exact same house, square footage, floor plan, the cost of lumber alone, that same house's cost way different. It's the same in our business. I'm just not building you a house. I'm giving you intangibles, but all the back end has gone up. So it affects everything.
Mm-hmm. And when the money supply is even bigger, when people have abundance, they're going to buy more. And then supply and demand curve kicks in. When the supply or when the demand is higher, the prices of things just go up.
At the risk of maybe getting in the political arena a little bit, let me ask you honestly. So Was it that there was too much employment in 2022 and 2021? Or was it that there was too much money that was printed by the new stimulus packages that even Larry Summers warned by passing that bill it was going to cause inflation?
Well, I'm going to definitely lean on the side of the second one. When I think about the economy and I think about the two levers that Tyler was talking about, the analogy that always comes to mind is a smoker, right? So I love smoking a brisket, ribs,
Now you're talking my
Or a
language.
cigar.
and I do love smoking a cigar. That's true. Any chance that I have to set something on fire and watch smoke happen, I'm a fan. But you've got to be really conscientious there because it's all about balancing the air intake, balancing the temperature, and it's tempting to see how things are going and be like, gosh, people are going to be here soon. Let me just open all of the vents and just amp this temperature up. But then the problem is you end up with runaway inflation when you do that, right? And you absolutely burn the meat and no one's going to enjoy that meal. And so there's a balancing act there. And that's what the Fed is designed to do, is try to thread that needle on having the amount of growth that we need without overdoing it, but also not clamping down so much that the whole thing goes out. You went to church, you came back, and all of a sudden, like the temp has dropped to 150 and the meat's ruined because it didn't stay within that zone you needed it to.
Through the diplomacy I just heard you spew out.
Yeah, that was incredible.
So what you're saying, maybe, if I'm reading it right, and I just want to ask, was all the additional quantitative easing after 2021 and the additional $1 trillion stimulus by the government a huge impact on the inflation we saw in 2022, or was it something that was baked in from the last decade?
No, what I'm saying is a brisket wants to stay.
We're talking
at about
meat, Mike.
212 is what I aim for.
More money equals more inflation.
And then eventually you wrap it in foil. You add some butter. I usually like to add a Shinerbach.
This is why when I call my financial advisor at Bluegrass Legacy, I talk to that man and not that man.
But when you're ready for a good meal, you come to my house, not to his house.
Yeah, my brisket's 150 every time. But the inflation is steady.
But let me ask you this, though, and I promise to try to stop anything that might be considered a little political. Like you said, the Fed is supposed to, and Jerome Powell, who's the chairman of the Fed, they're supposed to be like trying to look out 6 months, a year ahead of time. We saw this inflation occurring in early 2022, actually in late 2021. Everyone was talking about it. And then you had all these people, including Jerome Powell, calling it transitory, which was a whole new word for me at the time, saying, oh, this is just a short blip because of COVID or supplies or whatever. But he was quick. He wasn't quick at that point to raise rates, right? And then after it got out of control, he had to raise rates. But now we've seen inflation come down in the 2% area, which is their goal, right? I mean, they rarely ever hit exactly 2.0, but it's been a 2.7, 2.9, and he's not lowering rates. So it's like he was way too late in 22, but in 2025, we have lower inflation, but we're not lowering rates. And now we're seeing a problem with employment. I would say Jerome Powell is not good at his job, but I'm done speaking. I'll let you guys.
Yeah, it's the hardest job in the world, right? Because you have two, well, I love the gorilla analogy because I wouldn't want to fight either in the room. But you have people who are yelling at you to fight the one on the left, and then you have everybody else in the room yelling at you to fight the one on the right.
Losing proposition.
Yes, and the Federal Reserve is not there to get good press. They're there to do a job, and just like anyone else who's doing their best, they're doing the best they can with what they have. And what they have is data in arrears. They can do their best with trend lines and seeing where things are going to go, but there's also a lag in that data. Like, they don't have August data. We're in August. They don't have August inflation data. I don't even know if they have July data at this point. They're looking at data that's so far behind, and they have to make future decisions off of that. It's tough.
Government at its best.
Yep. And the tools they have are very, very blunt tools. And so they've got just a couple of levers that they get to pull, and they do it off of old data in hopes that it's not going to oversteer or understeer for something that's already happening in the future.
Yeah. And this is why we preach on this podcast and to our clients is you can't be reliant on the government. There's always outside forces that affect your financial situation. If you're sitting in your basement and you're just upset and throwing things at the wall because the Federal Reserve's doing this and, oh, the real estate market, it's like you need to make wise decisions to build that into your plan. The governments are going to change. We're going to have Republicans and Democrats in office. Things are going to go up and down. I mean, this is not going to be a surprise. The uncertainty should not be a surprise. Uncertainty kind of sucks at the time. I mean, no one's arguing that. But you have to also plan for those uncertain times so that you are financially free to not be handcuffed to governmental decisions. And that's why we typically don't get political because we preach that. It's just like, I don't care if Trump's in office. I don't care who's in office.
You should pay
you're
low
in charge
taxes.
of yourself.
Blue, red, we care about green.
That's our favorite
right.
color.
That is, and that's what matters. And so, yeah, so how do you kind of walk this line with your clients? Because I'm sure as soon as the Fed changes things, or y'all are almost one of the first calls. Y'all are like boots on the ground, first line of defense for your clients being, financial advisors. How do you walk people in there that are in their basement? They're just like, they're just angry or they're anxious. They're sitting there anxious because all these conditions are happening to them.
Yeah, I mean, well, the landscape's changed too. We can start with that because you used to be able to get news and then be able to place trades off of that information and maybe even get ahead of the rest of the investment world. I can't do that anymore. I'm in the chair, like able to push buttons and make money move. I can't outpace these massive mutual fund managers, even some individual investors. Information is no longer a commodity. So you have to prepare yourself for multiple possibilities in the future. And if you have all of your eggs in any one individual political ruling or any one investment for that matter, you can find yourself taking on way too much risk. And that's why diversification is one of the main things we focus on. You need to have an aggressive bucket. You need to have an emergency fund that's suitable for you and your family. You need to have commodities now have become a part of the equation since 2022's inflation. And golds, which Mike, I know you love, has been doing exceptional even this year because when bonds and stocks move in the same direction, you need something in the account that is moving the opposite direction, even if that's down. It's nice to have things that work together.
Commodities is a very interesting thought because you can own traditional gold and silver, but you don't have to have it in your possession, right? You don't have to
Well,
have,
I do, but
you do.
most people don't.
Most people don't.
Somebody has to have.
Someone actually has to have it, but you as the individual investor,
Theoretically,
you don't have to.
Fort Knox could be empty for all we know.
I thought Trump was going to visit.
And the fact that he hasn't freaks me out, man.
No, but you make a valid point, right? Which is there are people that are irrationally hoarding chunks of shiny metal at their house. And that might give you peace of mind, but that's not an investment strategy. Because in the event of the apocalypse, no one cares about your shiny rocks. All they care about is bullets and seeds. That's what's going to matter, right? So barring that, then, we are big fans of commodities, not in the event of you being able to ward off zombies with it, because it's not going to help. Only a shot to the head will help. What will help, though, is that commodities, historically speaking, respond very, very favorably in inflationary times. So you gave a great illustration earlier about the very real inflationary experience of a business owner and what you guys are dealing with. So that works its way all the way down. We've got a restaurant that we do business with, and they've gotten all the way to the point of the to-go containers that they use have just shot up like, goodness, let me think. It's something absurd like 20x in price.
Yeah.
Because, literally they said, we're raising the price because of tariffs. And so the underlying piece that's going on there is the raw materials are the first thing to move up in price, and then everything else cascades from there. And so if you want to battle against inflation, you do it with, yes, precious metals, but also oil and gas.
Lumber.
Absolutely. Lumber's a big one. Foodstuffs, right? So wheat and corn and soy and all of that. So a basket of commodities is actually one of the best ways to counteract inflation. It wins by a long shot during inflationary time.
Not to mention, you can put your pork belly commodities in the smoker and you have the best of both worlds.
Now we're talking full circle, baby. I
There we
like
go.
it.
We're back.
Yeah, we got them on board.
Let me ask you, the tariffs, Trump's tariffs, they shocked the heck out of the markets back in February.
Yeah, 3% day was normal in either direction.
Yeah, that was crazy. It seems like we've normalized. What is that going to do to the market? I know you don't have a crystal ball, but pretend you do. What should our listeners expect to happen with these tariffs? How are they impacting? Because now we've had them for 5-6 months. Granted, they change every day depending on what True Social says, but what should we expect and how does that impact us in our future?
So that was a very exciting time to be in our world. And well, when tariffs came out, it was such a shock. And he even campaigned on the promise that he was going to employ tariffs. So why didn't the market move then? It was the sticker shock. And I'm not to say that sticker shock isn't coming in the future and that some big irrational or scary thing might come out in the future, because that's totally possible. And it could be something completely different from tariffs. But what we saw earlier this year was fear. People were selling bonds because they just wanted cash. They were scared and everything was going down in price, even when it shouldn't have, based off of how markets move.
Time out. There's a big lesson to be learned here for every one of you. When people are scared, that's when opportunity is at its greatest, in my humble opinion. During the Depression, all the big guys that were the biggest companies after the Depression for the last 100 years or 80 years, they played smart during the Depression when people were scared. When people were scared back then, we were working with you guys and buying, and we have made a really good money from working on that fear. So when people are scared, that's when it's time for you, back at home, at your house, that's when it's time for you to buckle down, have a clear head, think about the true future of this great nation, and bet on the future. And sorry, had to throw that in.
That's
there.
true. And now we have to throw our disclaimer of past performance is no indicator of future return.
It's not.
But the theme has been the market has always recovered from every single drop and reached a new high every single time.
Just a matter of when.
Mm-hmm.
If someone takes me to Vegas and they say, hey, historically, for the past 200 years, this bet hit.
That's why they show the numbers on roulette, right? Well, 13 red's hot.
Yeah.
All right, let's talk about there's so many different names, but I'll just say the big long name, the One Big Beautiful Bill Act. We talk about the tax act. We love it for tax. There's so many awesome opportunities. Because I'm a tax and a supply sider, I believe it's going to grow our economy greatly. But from actual smart financial planning people, what do you think it's going to do? And do you see any new opportunities arising in the financial markets because of the O3B?
So at least in terms of inflation, one of the bright, positives is it's keeping a lot of the same things that were already there. So the impact, fingers crossed, should not be this massive, oh my gosh, inflation's this runaway train again. No, everything that was happening before is still true. So hopefully from an inflation perspective, that should remain calm, I hope.
But one concern is that, like a lot of things that have been going on in the government for several administrations now, is it's definitely going to continue to dig us in a larger hole from a deficit perspective, right? It has been a long time since anyone in Washington has given more than lip service to actually balancing the budget. And administration after administration seems to look to outdo the previous one on, oh, you think you can spend money? Let me show you how to spend money. And in spite of the, intent of DOGE, it was a drop in the bucket versus the outrageous rate at which this administration is spending, which was more than the previous and more than the previous and so on and so forth. And so it definitely continues to feed that beast, which just drives us up in terms of top line. But at the bottom line level, as a country, we've got some real problems.
Oh,
What
yeah.
does that do? Bring that in layman's terms. So like we know, we saw the United States debt got downgraded, right? Timing was weird, but I'm not getting back into politics, but it got downgraded. What does that do to T-bills? What does that do to investments in the market?
So a big thing we're seeing is a significant shift towards looking at maybe the dollar doesn't need to be the reserve currency, which that has been stalwart since World War II. Like that has been the safe haven. And you've got BRIC coming together, right? So you've got Brazil and Russia and India and China, and then increasingly others in that cohort that are coming together to say, well, maybe we need to disentangle ourselves from the US dollar. That's helpful if you're looking at the opportunity to engage in trade. It's problematic, though, if you've got a lot of things that are hinged to dollar, and the devaluation of the dollar just further feeds why a commodity-heavy portfolio right now makes a ton of sense.
Yeah.
So it's okay for the U.S. to run. The reason the U.S. has gotten away with running such big deficits and having such a huge debt is because
of our military.
Everyone, and because of smokers, but also because everyone in the world has depended on the dollar for their trading currency. And if suddenly BRICS were to become the new norm and the new trading currency for a significant portion of the world, suddenly our debt becomes a much bigger problem, right? But my saving grace in there is, are you going to bet on the US dollar, on the Brazilian, whatever they call it, or on the Chinese yuan, who engineers their own money, or on the Russian ruble?
Big deal whenever we went off the gold exchange, when
Yes.
our dollar was no longer backed by a physical asset. And that's why inflation is kind of running away, because you use the dollar to be the commodity of itself. It's backed by itself and the promise that
Full
it will be
faith and
worth
credit
something.
of the United States Treasury.
That's correct.
Your piece of paper means nothing.
Right.
A 20 and a 1 and a 100 on a piece of paper means nothing. It's the faith behind it
Right.
that drives.
So to circle back to the question then, your concern, even though we think, hey, the O3B brought back stability, all the tax laws are changing or getting better, it, according to the Congressional Budget Office, it's going to increase our debt, and that's a concern.
That's a big concern. Because that is the runaway train. It was inflation, but that debt, it just keeps going and going and going.
Okay. I would say we've had up times and down times in America since our founding. The world, the global markets have had good times and bad times. In the bad times, there have always been people that have figured out a way to make money. In the up times, there have always been people have figured out a way to make money. So don't freak out about it. Learn about it. Partner up with some smarter people than you, like I have, which is easy to do. Everyone's smarter than me. Partner up with them and find out a way to leverage off of whether it's bad or good. There's hidden money in the market, in an up market and in a down market.
And if you're looking for hidden money, the best way to do it is to smoke a really good brisket. Because people will pay gobs of dollars for really good brisket.
Can we talk about the prices of barbecue?
That's inflation has hit that the hardest.
It's crazy.
Yes,
out
it
there.
has.
So stay safe out there. Shop smartly. Guys, thank you for joining us again.
Always a pleasure.
Any closing thoughts from you guys of inflation, whatever, anything?
Well, I'd say one thing we help our people with is strategy. And if you don't have confidence or clarity in what your investment strategy is, then reach out to someone. And if you're interested in talking to our team and you like some of the things you're hearing, go to bluegrasslegacygroup.com, set up an intro call, and we'd be happy to help you.
So thanks for joining us on this episode of the Hidden Money Podcast. Until then, don't pay any more to the government than you're legally obligated to. We'll see you next week.